Alright, every quarter we will give you our thoughts after analyzing over 1,000 companies for that quarter, and this time it will be quarter 2. Now, in Q1, we shared several things. A key among them would be too busy to find stock ideas? Check out FIRL Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. Number 1, there's a lot of MACC and privatization news. But more importantly, we predicted that quarter 2 will be challenging. And so the question is, were we correct?
Yep, pretty much correct. That's the spoiler. But we're going to go through a little bit about the statistics that we found.
Okay, yeah. So about 1,105, just click next. 1,058 losses. Almost 30% are making losses. 19, almost 20, about 1/5 have made at least 1 quarter of loss.
Yes.
Around half of their earnings have actually dropped when compared to a year. Only a quarter declared dividends, and 0.4% dividend yield, whereas it's 6%, right, for Q1. But so Q2. But sometimes people pay schedules a bit different, so we can't really compare it anyways. And no surprise, only less than 3% of the companies we find are interesting, worth sharing with our FIRL Pro premium members.
Yep, exactly. I just also want to highlight the third point over here, right? At least 1 quarter of loss means that they make losses consecutively this quarter and also the last quarter. So you easily can tell that the quality of company that is listed in Bursa, right? Yeah, 20% is actually not so good. Okay, so our findings out here, we're going to be breaking down into a few parts. So number 1, which is solar. I think we talked about solar for quite a lot of times already. Even our masterclass also.
Bit of a cooling, right, in the past few weeks.
Yes, exactly. So you can see that Solar Vest, they already reached a peak and it's down like 6% from its high. Same for Samaiden, whereas for Pekat, it's only like a tiny drop, which is about 1.8%. And no surprises also, if you see their latest numbers, it's all pretty much very good. You can see that their profit is still growing, especially for Samaiden, their sales also is still growing. So looks pretty decent. But then why the market sell this company, especially for Solar Vest, right, is because of over here, they mentioned something about the China recent anti-involution, which is aimed to curb the excessive domestic competition. So they expect the solar module price to rise by year end. And also on top of that, there's SST, so that also will increase a lot of costs. And no surprises also, because we also talked about this before 1 month ago. So if you actually watch the video, right, you have a chance to actually probably exit out or cash out from the Solar Vest, or not Solar Vest, but solar EPCC companies in general. So yeah, if you're interested, you can watch this video where we talk about the China's anti-involution. Okay, second one, which is Discretionary. So Discretionary, there's 2 companies that we covered, which is Padini and Bonia. So you can see that after they announced their quarterly, it tumbled 8% to 10%. But if you look at year to date, it's also pretty much down quite bad. And if you see their numbers, it's actually also quite terrible. You can see that quarter 4 for Padini, it's actually down a lot. Now they're making about 7 million. But last year, they made about 26 million. So there is some sort of high cost that they are currently incurring. Whereas for Bonia, they are currently making losses because of the Forex. And also they spend a lot of marketing. So for those of you guys don't know, they actually hired twice Nayeon to be their
I remember.
So they spend a lot of marketing things. So that's why and that didn't really translate into sales. So that's why they're making pretty much of a bad losses. And and on top of that, they also got say that there's a deterioration of purchasing power arising for rising costs. So many people are not really spending much in terms of these clothing.
Well, I think it's also options, right? These are not areas. I mean, Padini used to be top of mind for a lot of affordable clothing. Not anymore.
Yep, correct. And this is also the same for Bonia. They also say that there's weaker consumer spending both in Malaysia and Singapore. Consumers are becoming more cautious with their spending, and in general, the demand for these kind of products kind of dwindled down already. Okay, the third one, which is a necessity. So the necessity companies will be 99 Speedmart and Oriental Kopi. Oriental Kopi, I just put it there because it's food. So people will generally go there and eat stuff and restaurant.
I mean, yesterday I was at 9 p.m. still aligned. It's crazy.
And you can see that the year to date is up a lot. Right now, I mean, ever since the Liberation Day, which is April, they are up 31%. So if you bought it at a time, congrats, you're making big gains. Same for Kopi also, they are making about 66%. And no surprises also, the numbers are still growing. I mean, it's pretty much very steady business. Okay, the fourth one, which is top sector. So I think this is the only sector that made at least their numbers look pretty much decent, and also they are in an all-time high. But if you look at their share prices, right, it's still pretty
doesn't reflect, except maybe Wellchip.
Wellchip, this one reflected. And also EMCC, if you're talking about from the bottom over here. So they are kind of like up about 20%. And if you look at their earnings and revenue, it's actually all-time high for Wellchip and also for EMCC, whereas for Papa Jack, their revenue is not, but then their profit is. The fifth one, which is top dividend yield. So there's two companies that gave up, the 6% one. So the 6% dividend yield. So these two companies are MUI Property and also CI Holdings. So you can see that MUI is giving out a once-off special dividend of 8 cents. So that actually translates about 20% dividend yield. Whereas for CI Holding, they're giving out about 7%. And it's pretty much steady for CI Holdings. You can see that their dividend payout is actually increasing. Okay, last but not least, top performer. There's a few companies that, their share price went up also thanks to their fundamentals. So you can see that there's
actually something we've been talking about, right, in our...
Yeah, and it's also inside the Catalyst portfolio. So yeah, it's already went up quite a lot already. Then there's FarmFresh.
Actually, you want to share, like, at what point did we initiate in the...
76 cents, I think.
Nice. Yeah, so it's a good 15%?
15%, yeah. At one point, it was like a 20% increase, but now it's like...
Yeah. FarmFresh, okay, that's a bit of a surprise.
Yeah, FarmFresh, Sunway Construction, these are no surprise, and also Southern Cable. So yeah, I mean, you look at their numbers, it's all very, very green, especially for, the Southern Cable. You can see that their numbers are all just like only green, same for Sunway Construction as well. So if you are shareholders of these companies, right, you'll be making kind of like a big bucks. Okay, so the final thoughts is that obviously the overall quarterlies are not so good as compared to the last quarter. Number one also is because of the Forex exchange. Ringgit has been strengthening against USD for quite some time already. And number two also is because of the tariff uncertainty. There's a lot of back and forth, whether they are charging 20% or 25%. So there's a lot of uncertainty that actually withheld a lot of business owners whether they should ship out their products or not, or they should withheld it. The second one, which is we are going to be talking about the future. So the future, we'll be looking at SST, utility, and also wage hike. And on top of that, you also have the foreign EPF mandatory contribution. So all these will actually increase a lot of costs for the next quarter, which is quarter 3. So that's why I think companies that are in the manufacturing space, or essentially actually most or all listed companies, will be impacted because of these, new cost hike. And then the third one, which, I think some people have forgotten about it, which is the real tariff impact, will actually come in next quarter. Mm-hmm. Yeah. So this quarter, we still didn't really see it because they only cover until June or July kind of month. But August is the month where they actually, the US actually impose the 19% tariff on Malaysia. So we will feel the impact next quarter. So we can see whether did their sales go up or did their sales go down. I think that will be a very, very key thing to look at. Yeah. Okay, so last but not least is, what is our strategy for the time being? So
I think overall, when we look in the next 2 quarters, there are a lot of signs that the market is cooling down, basically. I don't mean the stock market, I mean the economy itself. So we can see retail spending is already, not to say peaking, but it's stagnating. And then there are pockets that are doing well, but overall, the mood is pretty much down. And it's not just in Malaysia, but when we look abroad as well, apart from the things that we've been talking and repeating many times, like the 10-2, we see, Meta going through a hiring freeze. I think because AI is so hot, right? So when you look at, once you start to see signs like that, time to pay attention. So I would expect the next, the second half of this year to not be as good. And I think Q1 next year will be definitely challenging. So for me personally, on my Malaysia side, there's still some cash around, but I think for my foreign portfolio, there's a lot more cash. And the reason is because there needs to be a cooling period. Now, whether that becomes a crash or big correction, I wouldn't know. But good times always follow bad times, always follow good times. So this year is a good time for a lot of US investors, not really a good time for Malaysian investors. So intuitively, a very simple sort of way of thinking, it's not simplistic, but it's based on history. We can expect Malaysia should beat expectations next year versus the US.
Yep, exactly.
Could extend, right? The current trajectory could extend next year. So that's what investing is about. It's you always work on incomplete information.
So the strategy that we are imposing is that we want to look for companies that can actually give out some sort of a certainty. So how do we derive or how do we analyze certainty, right? Is whereby their business is not really export oriented, because export wise, there's still a lot of risks involved, which is tariff risks, whether they can pass on costs or not, and many other uncertainties. So that's one. We kind of like avoiding export, but certain export companies we did like nibble a little bit because of their valuation seems to be more attractive. Then the second one, which is dividend payout. I think this one we have been talking since the start of 2025 or maybe even last year. We say that we want to look at companies that can pay out dividend during tough times, because usually investors will start to like plow capital into these kind of like companies that have consistent dividend payout. So if you want to know more about our strategy, we actually share a lot inside our FIRL Pro group and community. And this is our August 2025's update. You see the numbers is actually increasing already. So for FPM is up 38%, global portfolio is up like 16%, and then the boring portfolio is now 6% as well. And if you so notice, right, there's like some stocks actually went out like double, some of like 50%, 70%-ish. And if you also look at the number of stock, it has been shrinking because we are only right now betting on companies that are compounders. And yeah, we are continuing to look for more of this insight. And if you guys are inside FIRL Pro, we share with you guys over there. And yeah, and also another thing, which is the boring portfolio's dividend yield is right now it's about 8.6%. There's 3 companies that haven't paid dividend yet, or at least they already announced that they're paying. It's just that it's not reflected in this particular month. Most likely it's going to be next month or the 2 months after.
Yeah, because I think for Burn Port, for those who don't know, one of the other objectives, apart from, sharing some of these companies that pay decent dividends, is actually the trying to outpace EPF. So if you're somebody who consider, like maybe you want to try something that is a bit higher than EPF, then you can take a look at the Burn Port. In any case, the whole objective of FIRL Pro is to really shortcut your research journey, right? By, in our estimation, 90%, right? We want to bring you all the way until all you have to do is to make a decision, rather than to do all the work of reading all the reports, meeting all the management, talking to customers, employees, and things like that. So that's what we do, right, at FIRL Pro. Yeah, and if you want to get a taste of what's inside the program, you can head over to the free sample link. One of our best performers is Kellington Group, which we initiated at under 2 ringgit.
Right? 1 ringgit 20 cents.
Yeah, 1 ringgit actually. Yeah. So it's almost a 5x, so that's fantastic. In fact, it is the guy that is helping drag a lot of the FIRL Pro laggards names as well. So you want to see how we do our write-ups, among other things, go check it out. And with that, we'll see you in the next video. Bye-bye.